pleased by your announcement to buy back stock at 110% of book value. He feels like a bit of a chump for sometimes having paid nearly 200% of book in the past few years. Since you've stated repeatedly that it's as bad to be overvalued as to be undervalued, why didn't you warn us previously when the price-book relationship was very different? Or have you not felt that Berkshire was trading above intrinsic value over the last decade?
We've written in the back of the report how we prefer not to see our shares sell at the highest possible price. I mean, we've got a whole different view on that than many managers. If we could have our way, we would have the stock trade once a year, and Charlie and I would try to come up with a fair value for intrinsic business value, and it would trade at that. That's incidentally what some private companies do, but you're not allowed that luxury in the public market, and public markets do very strange things. If Charlie and I think Berkshire is overvalued, it would be a very interesting proposition to have us announce, a half an hour before the market opens someday, and have us both saying, "Gee, we think your stock is overpriced." I mean, and we would have to do that with every shareholder simultaneously, and they would. Who knows how they would react? We have never, I don't think, certainly never consciously done anything to encourage people to buy our stock at a price we thought was above intrinsic value. The one time we sold stock under some pressure back in the mid-1990s, when somebody was going to do something with a stock that we thought would be injurious to people, we created a stock, and we thought the stock was a little on the high side then, and we put on the cover of the prospectus something I don't think has ever been seen, which is we said that neither Charlie nor I would buy the stock at that price, nor would we recommend that our family did it. And if you want a collector's item for a proxy, for material, offering of material, get that, because I don't think you'll see that one again. We think that if we are going to repurchase shares from people, that we ought to let them know that we think we're buying it too cheap. I mean, we wouldn't buy out if we had 2 or 3 partners and somebody wanted to sell out. But we'd probably try to arrive at a fair price. But if we didn't, if it was established by a market and they were going to sell too cheap, we'd tell them we thought they were selling it too cheap. We are not selling. We are not saying that 111%, we're using 110% of book, 111% or 112% is intrinsic business value. We know it's significantly above 110. And I don't think we will ever announce, because I don't see how we would do it, I don't think we'll ever announce that we think the stock is selling considerably above intrinsic business value, but we will certainly do nothing to indicate that we think the stock is attractively priced if that comes about.